Hello everybody, welcome to the Monday live stream. What a weekend it has been, and Monday has not disappointed. So we're going to take a look at what's going on, the four big things that I see. We're going through everything that has to do with liquidity, economy, regulation, institutions, which are the big four pillars that I see to get us to the promised land. So let's just jump right into it. But first, as a reminder, I am short-term bearish, but I buy Bitcoin, not every day anymore, just once a week. After we did a nice little review of dynamic DCAing once a week, which seems to be far superior, or at least superior to just dollar cost averaging or dynamic dollar cost averaging daily, and way more superior than dollar cost averaging, not dynamically. If you don't know what I'm talking about, there's a link in the description. You can check out dynamic DCA while we do these things. So today, this is our Monday, and we bought a little bit at whopping 77,460. I think the price right now is like, I don't know, 70, probably around the same price, 78,000 maybe. And I expect it to actually go lower. But the reason why we keep doing this is because you never know. You never know what the market can throw at you. And it really kind of comes down to what's happening in the market. And there's really four pillars that we see that can kind of prop us up or break us down to the lowest of levels. And it really comes down to four things, like we said in the beginning. Liquidity, how much money is sloshing around. The economy, it's kind of hard to get Bitcoin to all-time highs if we have to go through a recession. Regulation, and what's happening in specifically the United States after the Genius Act and hopefully the Clarity Act. And we'll talk about what everybody is talking about right now in Washington, D.C. with Brad Garlinghouse and a whole host of people like Brian Armstrong meeting with the president and the council right now as we speak to talk about clarity moving forward. Then also institutions, more specifically hedge funds and people like that. So first of all, let's start with institutions. ETFs are for retail. They are for advisors, and they also are for institutions like hedge funds and things like we just talked about. And lately, as you take a look at the Bitcoin flow, it's been pretty abysmal, quite honestly. If you take out that 6.8 million on 26th of January, it's been 2 weeks of negative outflows. And I think there was a piece that just came out that over the continuum of all investors that have gotten into since 2024, especially for BlackRock's ETF, they are in the negative. So we'll see if that keeps happening as far as like the outflow, or if the bleeding has stopped and people are actually giving in and saying, yeah, maybe this can be a pretty good thing. However, I can see why they are bearish, because same thing happened in 2018. Same thing happened in 2022. And guess what? It's happening in 2026. So that's the ETF flow. And again, it's probably a lot of retail, kind of hard to distinguish between retail and what would be considered the institutions that are buying this up. ETF, as far as for, oh, look at that. I have 2 Bitcoin. I don't want that. I would like Ethereum, please. And here we are. And it's even worse. So actually, no, that's not too bad. You got 252 million, 155, and across the board the last 2 weeks, roughly, besides this 117 and 28.1, it's been negative outflows as well. So why is this happening? Well, there's a whole host of reasons. You can take your pick at it. But one of the big things is precious metals are taking a clubbing. It's an interesting thing because I own a little bit of gold, not much. Like I said before, I didn't buy any silver. I'm not going to say that I did, because I did not. Should have, but here we are. And over the last, week or so, we've seen a monstrous reduction in the valuation of the precious metal markets. Gold, just today, is down roughly 5%. Silver down another 7.5%. Can you imagine the poor people that rotated out of crypto and digital assets and went into silver and gold, thinking they'd just ride that train? And then it dropped like 40%. Woo! Good luck. Anyhow, platinum, palladium, rhodium also down today, and that's across the board. And it's been honestly kind of brutal. And it's been so brutal. I took a look at the risk levels. Ben's got it up on his website now for risk levels for gold and silver. And just a week ago, the risk level, it was already topped out. It was at 1.0 for gold, and yet people still got into gold. I mean, it's just how it is, People are just going to keep buying and think, it'll never go down. And now here we are. So now the risk level is just below 0.7 in like less than a week. And silver is even lower than that. It was at 1.0, or the highest risk level you could go, because it's at all-time highs. And now it's less than 5. or 0.5, 0.47. So, I mean, good luck, silver and gold, but and all the different precious metals. But if you're wondering why there's like a sell-off for, you know, Bitcoin and ETF, it's because these institutions and probably a little bit of retail was like, you know what, I got to pay some bills. I'm over leveraged. I got to pay for these things. And that's pretty much what happened. And they got to sell off on top of everything that's happening in the traditional markets, even though technology sectors, technology corporations, companies are actually hitting their numbers, they're still going lower. Not everybody, but you know, Nvidia's doing just fine. But we're going to see that's essentially what we have as far as like for institutions. Now, if we take a look back, what we're looking at, institutions, regulation, kind of liquidation. Regulation-wise, I thought we were all good and dandy with the Clarity Act. I thought it was going to actually pass through, but then Brian Armstrong, and rightfully so, stood up and said, hey, this is BS. We can't be a part of this bill if these banks are not going to allow any type of yield in these stable coins. This is ridiculous. And this is not what crypto was built for. And I, for one, commend Brian Armstrong for standing up and saying, you can't do that. This is not what we're in here for. We're here for the people, not just to get rich, even though Brian's doing just fine. So today, as of 1 p.m. Eastern time, which I'm pretty sure it's happening still, it's at 2:40. They did not get this knocked out in an hour. White House will meet with crypto firms and banks at banks. Oh my gosh, I would love to just listen to Brian Armstrong and Jamie Dimon go back and forth at it and see who's the bigger crook. To discuss the crypto market structure bill. Talks aim to break a deadlock over how stablecoin yield we just talked about. Attendees are expected to include Coinbase, right there, Ripple, Brad Garlinghouse, right down there, Circle, Jeremy Allaire, and Wall Street banking groups, yeah, those, the banksters, such as the American Bankers Association. I will say it is quite interesting that, you know, you've got XRP, Jeremy Allaire, stablecoin, and they got their seat at the table. There's no mention of anybody from Tether being there. I find that quite interesting. Maybe that's just not being reported here, which I totally ripped off from Coin Bureau. Also stole this for the thumbnail. Kind of a busy day. Thanks, guy. And that's what's going on. So hopefully they can hammer that out. And if we do get regulation and it actually passes at some point, remember, it's already gone through the House, got to go through the Senate committees, which unfortunately the Banking Senate Committee has Elizabeth Warren as as the ranking member, not the chair. So good luck with that. Hopefully that gets worked out. Hopefully we can get regulation. Hopefully we can get some yield, because it's not like the government is not going to not stop printing money. So that would take care of regulation. Then the last two pieces, and we'll get to Q&A, liquidity and business cycles or economy. Just today, we had the ISM manufacturing numbers come out. What is that? It's the Institute for Supply Management. Essentially, it's just pretty much a survey, which is saying, like, look, in the sector for supply, which is only like 17–20% of the economy for America, we're mostly service. How much are we going up? How much are we going down? Anything above 50 points is considered expansion. Anything below that is a contraction. Previously, it was at 47.9%. The forecast was 48.4%. And guess what? We knocked it out of the park, ladies and gentlemen, at 52.6%. 52.6%, and the forecast was 48.4%. They thought we were still contracting for ISM manufacturing, but we're blowing out the gates at 52.6%. Why is this important? Well, let's back up real quick and talk about liquidity. And the reason why I like to talk about liquidity and the ISM and business cycles is because that's where the super banana zone cycle monstrosity is coming from. And I hope it actually works out. I have no faith it's going to work out. That's not true. I have a little faith it could happen. I'm just very cynical. Sorry. But if we take a look at liquidity, we've never been higher. This is the global liquidity supply at 103. That's not right. This is 103 trillion for December 5th. Okay, this is December 5th, 2025 at 103 trillion. You know how much we have now for the liquidity, for global liquidity? We have $108 trillion. Well, 108 trillion worth of money supply sloshing around. So somewhere we got like 6 trillion over the last 2 months. Congratulations. We've got plenty of liquidity. Yet Bitcoin is at 78,000 and altcoins are in the toilet as well. Also, for the M2 money supply United States, we're at 22.41, which hasn't gone up too much, but we're at an all-time high as well. And of course, we take a look at the M1, the narrow money supply. You can see that China and United States and G10 are all at all-time highs as well. So there's a ton of funds sloshing around that should have found its place. Unfortunately, it found its place in gold and silver, and that's being taken back right now. So to get into the business cycle part, this was the big thing, and I was hoping for. It really was. There's services economy, which is the ISM services PMI, and we take a look at that. That was actually doing very well, already at an expansion at 52.7 as of last time. But it just came out today, and we're at almost 54. So we have increased in the services sector for PMI. They were saying that once this goes up, we should see a nice bull run rally. And I sure hope it happens. This is just the first time that we've gotten, or today we've gotten this new data. So maybe in 2 or 3 or 4 more months, I will be proven wrong and everything will go banana super cycle and I will eat my words, but I will also be cashing out because my portfolio went up. That's great. If I'm right, then I'll just keep dollar cost averaging and I'll wait until there's a massive appreciation, which there always is. Either way, I feel like I'm still the winner. And I get to talk to you fine people, so I'm a big winner. And then lastly, we're taking a look at manufacturing. And previously, we were in the dumpers. 48.2, again, we were retracting. And as of today, 52.6, the expectation was 48.4, and that's quite a blue Valhalla candle. So congratulations. We're going right where we should be. We'll see what happens in the next 2 or 3 months. Business cycle is aligned. Liquidity is aligned. Institutions will probably be just fine as they stop selling off because they lost their tail in precious metals and God knows what else. And as a quick reminder, I am kind of flabbergasted because we took a look at the flash PMI reports, services and manufacturing, and they even told us the direction it was going to go. Yet, the price still went down. So the longer that I'm in the actual markets, the more I just realize it just comes down to speculation and momentum. And that's pretty much where we're at. And that's it for today. So look, if you like today's video, give it a thumbs up, consider subscribing. Everything we talk about is relatively time sensitive. Now let's get into a little Q&A and answer all your questions, and we'll go from there. And Crypto Golfer says it's all lined up. So you know what that means? More pain. Probably. It never ceases to amaze me just how far along that we get in the cycle. And not just the cycle, but just the great bullish news. And now here we are. And there's plenty of blame to go around for whatever reason. If you think it's just, manipulation and it's the shadow government and it's CZ, Binance, playing the puppet masters and doing all the things in the background, maybe, I don't know. But I can tell you what my portfolio says. It says that I'm a little bit down and I'd like to be helped up, please. So we'll see how it goes. And then taking notes says, did you increase your buy since we are so down? Yes. So everything from below 5, I started to buy. And then when it gets to 4, then I double up. And when it gets into 3s, I triple up. So I actually, like I said in this post right here, okay, I said as of 0600 hours on February 2nd, 2026, Digital Asset News LLC has acquired 3 times the amount of sats based on the current risk level of 0.357. Again, once it gets to that level, I triple up. And if it gets to 0.2, I'll be quadrupling it. In accordance with our dynamic DCA principles, thank you for your attention to this matter. So there we are at. And of course, again, I'm not a big believer in super cycles and all that stuff. So I fully expect this to go down, fully. And if I was smarter, I'd probably just wait till like the 200-week moving average, like people tell me to do. But then I remember one thing, which is, everybody else was wrong about the tops of the market. And so nobody really knows what they're talking about for the most part. We hope that it works out like this, but there's always this unknown, 20, 30% it could actually happen. So I'm just like, well, the worst case scenario is Bitcoin goes to fill in the blank number over time. I still think it's going to go higher. If there's one truth which never changes, as long as the US government continues to print the US dollar and debase our currency, then the price of assets will continue to increase. And because of that, that's why I continue to buy Bitcoin. It's very simple. I'm a simple, very simple person. Jim says, hey, Rob, did you increase your Solana and SWE buys? So just sticking to Bitcoin. Right now, it's just the Bitcoin, but I am really contemplating getting back into Solana. Now, over the last couple of months, I've bought a little bit more Solana. It's true, I have. And, you know, gosh, if we take a look at the moving averages, I think that Solana is, let's see, is right around the 200-week moving average. Let's see. Moving averages. Let's just steal some information from Ben's site yet again. Bitcoin, Solana. Let's see, apply. Oh, well, there we are. So usually this is like a level of support as the TA folks talk about. And then once it crashes or goes below, it can bounce up a little bit again. But the more times you break through, it's like a little bit of ice. Every time it taps until it breaks through. You come out of the water, the icy water, and then it goes down again. So we'll see. But yeah, it's below the 200-week moving average, or actually right at. Let me reset that. We can just draw a line like, well, we can't do it 200 weeks, I don't know, round, but remember these days? Look at that. If you go through here, buying Solana at $20, $19, $20, $18, 16, wouldn't be bad. $14. And I'm sure everybody in the comment section will say, that's when I bought all my Solana, when it was $9.30. Yep, timed the bottom perfectly. Of course you did. Yeah, and you know, anything below that's pretty good. I think that's what people are waiting for. We'll see. But I bought a little Solana, but not anything recently. Patience is the way to do it. That's pretty true. Yeah. A Rational said I got most of my SOL at $20. Bought at 150. That's me and Mary. Let's see. Huh. You know, weren't we just complaining about how things were overpriced? Or, you know, actually, that's not a way to say it. Weren't we just saying, like, when Bitcoin broke above 110K, we were talking about how like we wished we could get it at cheaper prices. We wish we could go back in time. Well, here's our time machine. If you think about it, if you're in this time machine, you're going back and it's like, wow, 77K, 78K, it's pretty good. I mean, like the last cycle, we only hit 67K. Last cycle. And then I remember when it was before the halving in 2024, we actually went above 67 up to 73, 74, somewhere around there. And people are like, this is crazy. Now to be able to go back to that price, it's unreal. I mean, I'm trying to stick to the strategy that I've put forth. But these are the times, I think. It's good for me. I can't give financial advice. But yeah. This is true, actually. Mott says, say what you want about Sam Bankman-Fried, but the guy was shilling Solana at $4. It's a good point to say. So besides the fact that he crashed everything else, he did have this one thing. CBK says, start DCing around July and August. That's what everybody believes. Like, I believe in the 4-year cycles. So you would think, well, Rob would just, you know, save up everything and then start buying towards the end of the year, because the low is going to be sometime around October, November 2026, right? The 4-year cycles hold up. That's true. But there's this nagging part of me. I don't know if it's a part of me to prove things wrong or prove things right. But there's like this little part of me that says, you know, it could be. So I'm listening to it, and we'll see. And I mean, the worst that can happen is that, you know, I don't get to buy Bitcoin at, you know, 60. Well, I'll still be buying Bitcoin all the way down, so it won't really matter. Just the amount that I'll be doing. So I won't be able to buy Bitcoin at 65 or 60K, which I have to tell you, to go down to 60K, I could see it. because the last cycle we went down 77%, but we had a major blow off top with altcoins. So I don't see it dropping that hard. But if I do and it gets to it, well, I just don't get to put as much in. I think I'll be okay. Let's see. Imagine Theta taking back a top 10 market cap spot. That would be something. Yeah, that was such a great, great buy back in 2020. Then 2021, great again. But you had to sell it to make those gains. That's it. And Crypto Stevo says it right. This, I think, is where we should leave it here. This is exactly why I tell everyone who's new to crypto to have the majority of your portfolio in Bitcoin. And it makes sense. And it really does. It's just being able to hold on to it and sell it at the right time. Because if you think about it right now, if you would have bought Bitcoin back in the tip top of the market in November 2021, you'd be up by like what, 20% maybe over 4 years? That's not that great, quite honestly. If you would have, though, bought during the bear market, when it went down to 17, 20,000, 24,000, your cost basis would be low and you'd be much better. So these days, I pretty much in agreement with that. Although I still think there's room to run for the best tokens. Binance, Ethereum, Solana, and Tron. We'll see. And that's it for today, everybody. So thanks so much for stopping by. I appreciate you. Like today's video, thumbs up, subscribe. That's it for this one. I will see you guys tomorrow. Hopefully it'll be a great day, but that's it. See you guys. Adios.